One of the quagmires or paradoxes of forex trading or the financial markets as a whole, if you may, is that you can do everything right and still lose, which leads to two questions. Then what are we doing? And what should be the actual goal? Now, before you can give up, let me explain this. Ladies and gentlemen, I'm Max Capital, founder, risk manager, and performance coach at Wall Street Institute and Company. And I'm excited to explore how to develop a trading edge with you today. So, coming into trading, I think it's one of the things that one of my favorite authors of trading books is Mark Douglas on trading psychology and risk management. He goes into details with this. So there's certain beliefs and certain ideologies that you have to unlearn coming into the financial markets. The simplest of them is we're used to jobs, right? In a job, you do a particular task and then you get compensated um, based on the agreements, right? But in trading, and before I can get into trading, and what normally happens is if you do the right task, do it well, sometimes even do more tasks. What happens is normally you get promoted, that means your salary goes higher, or you get a better commission structure, and your manager is looking at you. You might be next in line for a promotion, right? So those are the benefits of doing a job. By the way, speaking of a job, 9 to 5, I'm not gonna be one of the forex traders that are going to bash that. Um, because I believe it's a great place to start. Where can you get capital? Where can you get enough money to buy the necessary equipment, your laptop, make sure that you are connected to the internet? So many things that a job provides you with. When I started, my mentor said, find a job, find a way not to need the money, find a job so that you are not strictly relying on your trading income, so that you can avoid making silly mistakes based on the need to make money. So yeah, that's the difference is with a job and trading is that in trading you can do all the right things the right way and it still won't work up. So if being faithful to the process, it can still leave us vulnerable to making losses. Then what are we doing? Um, let us look at an age. An age basically it is the higher probability of one thing happening over the other when you have this set of variables and conditions in the financial market. Maybe not in the financial market, in anything else. I'm a former professional soccer player. So when we were doing drills and training, the coach used to tell us that if you are a midfielder that's very good in taking long range shots, this is the right way to control the ball. This is the right distance the ball should be in front of you, and this is how you get in contact with the ball. Your body should be over the ball, but still you can miss. But you know the areas where you have an edge. Hence, we have players these days that have an identity. You know that it's gonna push, run into the corner, cut inside, drop the shoulder, and then whips it into the near post or the far post, depending on what's the age of that particular trader. Similarly, in trading, there are certain conditions that you know that if the market prints like this, or if buyers and sellers or the supply and demand equation is this way, here's what's more likely to happen over the other thing. Now, when we speak of an age, it is something that is highly spoken about in this industry, but I feel like um, people don't go into details much. So, what is basically an age? I've just explained that, almost went back into that again. So, um, speaking of age, the win rate for every trader It's not the same. We might be trading the same strategy, but we may not necessarily get the win rate, which means um, then that is up to the individual. Or let's look at different strategies. Different strategies have different um, win rates. So that tells you that the presence of edge doesn't mean you're going to make money 100% of the time. I mean, my win rate is between 41% and 53%, and I'm happy with that. Look, you don't have to have a 100% win rate strategy. Some of the best traders in the world were doing it with a 10% win rate. That is Richard Branson. He is famous for taking 1,600 US dollars to about 400 million US dollars in profits back in the 80s, doing the same thing that we were doing today. So, what was the difference from this guy, and how was he able to offset such a low win rate? Basically, this guy had a 90% losing rate in other terms. So how did he offset that? It was through his risk reward ratio. So you want to get into an opportunity that offers you a higher reward versus a very likely risk that you have to take in the market. So not Richard Branson, Richard Dennis. What he did was his losers were very small, so he was very good at cutting losses short, and his winners were monsters. That's how you win in this trading industry, and that's how your edge gets to play out um, in the long run. I mean, you must have seen this where you have an A-grade setup. I mean, you've chart is clean, you've thrown your levels the right way, but the market, when it gets to that supply level, it just pushes through it, and you're wondering what's happening. So sometimes the reason may not be entirely up to you. You must understand that this is, let me call it a game. It's a game of buyers and sellers, and there is no way to know at what instant is Citibank going to convert those US dollars into euros for their clients. You may not know when the IMF is going to probably send funding to Zambia and Africa, and those US dollars get converted to Zambian kwacha, and maybe if let's say that's 400 million US dollars, maybe that kind of order can cause a shift in there's no way of knowing um, when that is going to happen. So the best setup can still result in the loss. So then you ask yourself, I mean, probably I experienced this a lot when I was coming up. Remember, I've been doing this for 10 years, ladies and gentlemen, over 10 years. Where even people around me would ask me, where is the money? So I was deep within it. I was in the market. I was trying every day, but couldn't show in my life. But there is one particular thing that I understood when I got into this, because I feel like with everything that you do in life, you must understand what it is and understand what's the price that you have to pay for the results that you create. Yeah. So I understood coming in that this is one of, I know it's overlooked, and sometimes it gets a bad reputation because of scams. I'm totally aware of that. But the mindset that I have was, if I can figure this out, if I can figure this out, it's game over. Because take me anywhere on God's green earth. I might not have a job. Take me and me in Luxembourg, Monaco. Maybe Monaco is rich. Put me in Yemen. Put me in Singapore, wherever, the Caribbean islands, Alaska. As long as there's an internet connection, as long as I can get an account as little as 100 US dollars, then I have a chance at life. So that was the thing. And I was able to understand that this also means that I have to put in time in understanding this and making sure that I'm following the right processes. I'm doing it right. Just trying to check my mic here. So losing sometimes is not necessarily your fault, so you need to be focused on the processes. So one of my opening remarks was You can do the right things in trading and still lose. Mark Douglas really sorts this problem, or what he does is just brings a lot of clarity through his five fundamental truths of trading. Number one, I may not list them as they are listed in his book, Trading in the Zone, but first things first, you need to understand that anything can happen. So to me, that just tells me that accept whatever outcome that you might have, but in the same breath, um, prepare as much as you can. You need to know as much as you can. Calculate your risk, because the only way you can be protected from this randomness or your account is if you calculated your risk. I mean, it is said, live to trade another day. So hence you must risk a small portion of your trade account. And you also need to figure out when does your edge really play out. Once again, going back to my trading experience, what I've been doing in the past 4 years, it has costed me a lot of things, businesses on the side I could have started, opportunities I could have taken advantage of, because I was collecting data. I was just making sure. You can never be 100% sure, of course, but I was just making sure that what I know appears many times enough, and what variables did I need to tweak. So how can you figure out when does your edge work out? Simply journaling and reviewing. Now, this is a very hard task. It's very boring. One of the great things that journaling can help you with, like I said, is identifying your strengths and your weaknesses. More than that, journaling will also help you understand yourself, because trading is so much about that, understanding yourself, even picking the style that you're going to trade, whether you're swing trader, day trader. It is based um really based on your personality. So speaking of fundamental truths by Mark Douglas in Trading in the Zone, before I forget, it says anything can happen. Second thing, you don't need to know what's going to happen next for you to make money. And he then describes an edge, that an edge is a probability of one thing happening over the next thing. You see, that already puts your mind at ease. And here's one of my favorites. You do not need to know, or there is a random distribution. Let me put it like that. There's a random distribution between the wins and the losses for any set of variables that define an edge, which means you cannot know on trade by trade basis whether that trade is going to work or not. Then the question is, why are you doing it? It is because you've seen that pattern through your back testing, and you've traded them, and you know that when that happens, there's higher chances of winning than losing, or the market doing this than that. So you bet on the side of the high probability. That's basically what we really do as traders. Before I forget, what's the other rule by Mark Douglas? Every moment is unique. Like you might have taken a very nice trade of that shape of a pattern. Uh, Maybe in the previous trade last week, last month, last year, it might have worked out. It may not work today because the conditions have changed. One of the beauties of trading the financial markets is that it helps you understand the world in general, but really also be able to be in sync with that. So if you just focused on your outcomes, what is going to happen is you're going to be discouraged when you're going through, let me say, that learning phase, when let me say not everything is going your way, when you're making losses but you're still doing the right thing. So if you just focus on the results and not the process, you are probably going to be one of the people who gave up very early in the industry when they had a chance of making. Trust me, this is a lifetime skill. Hence, I'm not a stupid person. Hence, I have dedicated most of my life to this. You might not see me driving a Lamborghini today, but we're working on good things. I'm at a mental space now. My confidence is up there. I'm not euphoric because, like I said many times, there's a very thin line. But I really understand when my edge plays out, and I'm really focused on the processes and making sure that I guide my mental frameworks, my thinking processes, so that they are always in line with the markets. Otherwise, once this thing starts paying you, ladies and gentlemen, like I said, it is game over. Hope you enjoyed this video. Let me know what challenges did you have with developing your edge, and if you need any help with identifying key areas that you might need to tweak so that your trading performance becomes better. Or you'd like to trade with us. We've discussed so many of these topics on our daily life trading sessions that we host every Tuesdays to Thursdays, every week from Tuesday to Thursday. So we do a London and New York live trading sessions. As always, ladies and gentlemen, prepare, calculate your risk, accept it, make sure at all times you mind your risk. See you on the next one. Cheers.